Markets on edge, AI on fire, and a $1.5 billion job offer rejected. From Wall Street jitters to African lithium and Japanese VCs backing Indian startups, this morning we unpack a storm of power moves and policy pivots. Welcome to Top of the Morning by Mint, your daily shot of sharp business intel, global trends, and market movers. It's Monday, August 4th, and I'm Nelson John. Let's get started. Brace for more uncertainty. That's the market mood captured by Mint's quarterly investor survey, just as US-India trade tensions flare up again. With stock valuations running high, earnings under pressure, and foreign investors exiting in chunks, the Dalal Street rally is looking fragile. A snap survey of 34 top investment professionals reveal most expect the volatility to persist, especially if the upcoming US-India trade deal includes surprise penalties or tariffs. 77% of the experts say geopolitical risks may have dipped slightly this past quarter, but warn that the trade pact could actually jolt markets. Case in point, the July 31st sell-off after unexpected US tariffs and penalties. There is some hope. 76% of those surveyed believed India and the US will eventually land a balanced trade deal. But India's defense ties with Russia and refusal to allow US agri-imports are still major sticking points. Meanwhile, foreign investors pulled out nearly 18,000 crore rupees in July alone. Half of the experts believe FPI inflow will stay selective until late FY26. Earnings too are a mixed bag, with downgrades in Q1 but optimism for a second half recovery. Sectors like oil and gas, NBFCs, PSBs and pharma are expected to do the heavy lifting this quarter. IPOs might add some spark, but most agree it'll take more than just new listings to restore broader confidence. For now, the market's holding its breath. They are the building blocks of modern life: lithium, graphite, gallium. But here's the catch. China controls over 70% of their global refining. To change that, India and the US are quietly working on a new frontier: Africa. Sources say both countries are exploring joint investments in African critical mineral projects, hoping to build alternate supply chains for minerals crucial to EV batteries, solar panels, and even medical tech. We're working closely with India to ensure access to critical minerals, said a US State Department spokesperson, citing two new frameworks, Compact and Trust, which aims to deepen economic and tech cooperation. And at the recent Quad foreign ministers meet, the Quad Critical Minerals Initiatives was also launched to resist price shocks and political coercion. India is making moves too. In January 2025, it launched a 16,300 crore rupee critical minerals mission, with 368 domestic exploration projects underway. Plus, New Delhi is an active member of the Mineral Security Partnership, a coalition with the US, EU, Japan and others. What's interesting here is Washington wants to tap into India's business networks in East Africa, a region rich in reserves and geopolitically strategic. But here's the reality check. The IEA warns that diversification will be slow. Even by 2035, China may still dominate critical mineral refining. Still in the race to power the future, from batteries to turbines, India and the US are betting big on Africa. India is becoming the new frontier for Japanese venture capital. Disappointed by lukewarm exits back home and in Southeast Asia, a growing tribe of Japanese VCs is now placing quiet but firm bets on India. Firms like Incubate Fund Asia, Beyond Next Ventures, Enrician India Capital and Genesia Ventures are shifting their focus, enticed by India's booming IPO market and startup momentum. In just the first half of 2025, Indian exchanges raised over $6.1 billion from 119 IPOs. Now that's 4 times of what Southeast Asia managed in the same time. Japan is finally waking up to India's potential, says Nao Murakami of Incubate Fund Asia. His firm recently closed an $80 million fund, with 80% of it going to Indian startups, and is planning a $100 million fund, which is India-heavy, soon. Beyond Next has backed 14 Indian startups and is now raising its first India-dedicated $50 million fund. Enrician India Capital has already allocated its entire $120 million fund to Indian startups, betting big on climate tech, robotics, and biotech. Even Suzuki and SMBC are getting into the game. Suzuki, with its 340 crore rupee startup fund and SMBC's $200 million Asia Rising Fund backing clean energy and mortgage tech. The sectors drawing attention: deep tech, defense, semiconductors, and biotech, with a willingness to stay patient until the IPO or acquisition comes through. The shift may be gradual, but it's no longer tentative. Japan's VC dollars are coming in, and they're here to stay. Would you walk away from a $1.5 billion job offer? Well, Andrew Tulloch did. And Silicon Valley hasn't stopped talking about it since. A graduate of Cambridge with distinction, Tulloch began as a strategist at Goldman Sachs, but quickly pivoted to machine learning. After 11 years at Meta, he joined OpenAI in 2023. But just a year later, he made another bold move, joining Thinking Machines Lab, the AI startup co-founded by Mira Murati, and now valued at a jaw-dropping $12 billion in its seed round. That's when Mark Zuckerberg came calling. According to the Wall Street Journal, Zuckerberg personally tried to recruit Tulloch to lead Meta's superintelligent unit, allegedly offering a compensation package worth up to $1.5 billion over 6 years, tied to stock performance and bonuses. But Tulloch said no. Meta called the figure inaccurate and ridiculous. But the buzz was enough to send Tulloch's LinkedIn screenshot viral, tracing his rise from Goldman Sachs to Meta, OpenAI, and now to one of the most coveted AI labs in the world. On his website, Tulloch describes himself as someone obsessed with building practical machine learning systems, from Meta's real-time ad platforms to OpenAI's cutting-edge models. Now at Thinking Machines Lab, he's aiming to take AI beyond chatbot. And so far, not a single researcher there has taken Zuckerberg's bait. Despite their growing strategic embrace, India and the US can't seem to ink a full-fledged trade deal. And now Trump's latest tariffs may have pushed the dream even further out of reach. Experts say India could lose up to $33 billion in exports following Trump's move. In response, New Delhi is reportedly considering reimposing digital taxes on US tech giants. Think Meta, Google, Amazon. And while both sides say they're committed to talks, the road ahead looks rough. Utsav Verma from Choice Broking summed it up. This isn't just about tariffs, it's about deeply different philosophies. India wants to protect its dairy and agriculture sectors. The US wants access. And mutual mistrust, amplified by 90-plus WTO disputes and lingering trade deficits, isn't helping. Add to that the geopolitical rifts, India's close ties with Russia, rising nationalism on both sides, and a lack of a formal trade negotiation council, and you've got a volatile setup. Vinod Nair from Geojit says even the threat of US penalties on Russian crude imports is causing Indian refineries to scale back, rising fears of inflation. Meanwhile, experts warn that without calibrated compromise and depoliticized trade diplomacy, the deal could stay frozen. Still, hope lingers in sectors like climate tech, defense, and resilient supply chains. But for now, it's clear the world's biggest democracies are not yet on the same page yet. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest news. Until then, this is Nelson John signing off. Have a great day.